everybody, and welcome back to another Sunday Sessions video. So today I'm going to be starting off on the Euro US dollar, and finally we have Wi-Fi in the house, so we can actually go back to the old school way of doing things and actually navigating a proper chart. Thank God, rather than just having to use images and talking through them. So hopefully this is going to be a lot more sleek and a lot more easy to understand. So as stated here on Euro US dollar, now for a very long time my bias for this market was actually bearish, and I was hoping to see the reversal and continuation lower from this zone. So if you remember, there was a period of time sort of around the end of last year to start of this year, so we're maybe talking 3 weeks ago now, where we did tap that zone, showed signs of reversal, and we were starting to look towards sell positions in the market in hope that we could start loading up and hedging in on those to sustain that move lower. However, we can see prices penetrate that zone. That's an indication now that we are going to remain bullish for a slightly longer period of time. Obviously, I have two further supply zones slightly higher up in the market that I would hope to see the mitigation of. Now, taking that bias and working within that knowledge and that understanding, that's obviously going to mean that we have a lot of leeway for price to remain bullish. Obviously, as of right now, we're here. And if we use the ruler tool, we see that from price as of right now, we are 650 pips away from the next supply zone that I would say price should reverse from. And that is obviously one component within my story of this market. So as we go lower, obviously I have identified many zones as price has taken off. Whether or not these are still valid is unknown, because we have taken off obviously a lot since then. I think sort of like these intermediary zones aren't as relevant. What we can identify since this reversal down here, so since this accumulation, is that this is definitely a very nice sell to buy region where there's high volume, and we did appear to start curving off as we approach that region, obviously because there was starting to be a lot of liquidity pumped to the downside. A lot of people like ourselves were looking at this zone to take short positions from, and therefore a lot of supply had been entered into the market, obviously just not enough to reverse it fully. And evidently it was always the smart money operators' desire to push price through that regardless. So we'll keep those on for longer term pullbacks. Although I think given the way the market's moving, we should probably focus more on what price is doing as of right now through the use of these slightly lower time frames. So I would say the most recent or the major impulsive wave we want to work within and identify and look at is going to be inside of this box, which we'll identify as an impulsive wave. We see very high volume as we started off in the creation of this impulse. We'll drag these out because obviously price has been ranging in this region for some time now, so it's not quite managed to come back down very quickly. However, these two zones are still representing unmitigated orders, hence why both of which have those alerts set. We can see that within this ranging period, I still believe that supply was going to take control overall, as although we were getting liquidations of the zones, we were still sort of reversing in the region, and when we were reversing, a lot of high volume to the downside. So what I saw was that we had some fractal bullishness. So for example, impulse correction, impulse correction, impulse. I was looking inside of this because this should have been a protected low. We broke that protected low. We see we then had a pullback into a supply zone. We had some entry confirmation, which is something I ran through in the VIP chart, a little potential opportunity, a partial at 3.4 RR, and we ran 6.9 total. So nothing huge, but a very nice small position to take on the last day of the week. Now, obviously, prices come through. We've invalidated this region. Probably worth noting as well that we potentially could have gotten involved from this zone tap. As we see that we did come up, reversed in the region, came lower. Maybe we would have taken a partial if we go to the 15 second. Not the nicest signs. Of course, we could have looked at this and said, right, well, that's an impulse. We break that low. We trade back up, continue trading lower. Okay, I don't think an entry would have been found there. absolutely fair enough. But nonetheless, price is taken off. So let's just get back on track with what I'm trying to say. We don't really know at this point. I mean, when it's range bound like this and it's not showing clear signs of reacting to supply or demand, it's much less likely that if we identify zones that they will hold and they will sustain a nice position. Therefore, I think what I'll do is I'll probably just wait for price to break this range, and therefore I'll set an alert here at the top of the range, and then I'll also set an alert right down here, so we're notified as soon as price breaks out either side. Let's now head on over to the US dollar yen. We can see, looking inside of here, that price has tapped us back down into a little demand zone, which I think was potentially identified on this time frame. Yep, a sell to buy right in that region. We've recently tapped into that, so where supply was once in control and we were looking for sell positions, obviously we see we're now potentially having the reaction to a major demand zone, and therefore we would expect that the bulls or demand is going to take over this market, so we can sort of just get rid of any of these zones now because they're no longer too relevant. Now, obviously, like this one here is pretty major, so I might keep that one on just to be wary of if price does trade up towards that region, that it may hold and actually cause some sort of reversal power. But if we go lower, okay, so the overall impulse in this region is obviously going to represent this here. If we start going fractally, however, we can identify impulse, correction, impulse, correction. We fail to create a new impulse. What we could see we've potentially done if we just move this back. After we had the original tap, we then have a buy to sell, a sell to buy, sorry, right in this region here that it appears prices come back down to tap into. Now, what I do want to do is identify on a lower time frame if this was a valid zone. Yeah, I mean, that looks pretty spot on. If not, we maybe would have even identified like this whole sell to buy, but the refined zone would look a little something like that. So we see that what we did is we broke a protected swing. Okay, we see that we broke through, we broke away from that protected swing. We reacted to supply, and therefore was an indication that supply could be taking control, but the move that was sustained from the reversal of the zone was not a move that came to penetrate the previous low, and therefore to me makes it less likely that there is enough supply to sustain any further bearishness. And therefore what we can expect is, now that we've had the reversal from this region, demand should hopefully take over. If we now see the break of this level here, that's going to be an indication that we are bullish longer term. If, however, we then break lower and break that low in the market, that is going to be an indication of further bearishness. So relatively similar situation in this region, such that we sort of just need to wait, be patient until price breaks out to either side, where we'll have confirmation of what is happening in the future. So those are basically the two major markets I'll be watching. I'll be watching them on the lower time frame, short term, to try and catch some, I guess, scalp-like trades during the day, as my schedule has changed slightly. So I have only 3 days during the week to trade, and therefore I don't really want to be holding longer term positions if I'm not able to sit and actively watch them or actively manage them on a daily basis, whereas I used to be able to do that. So as of right now, I'm going to have to take a slightly more aggressive, shorter term approach to my trades, and therefore will be using lower time frames. So just a quick recap. Obviously, we expected this bearishness for a very long time. We were trying to get involved in it, but it was just too high volume of a move for us to really find any decent positions. Obviously, there was no major pullbacks. That's absolutely fine. We now hit this demand zone. Clear hesitation, like even as we've slowly approached it, this is all representing hesitation in my mind. And, you know, we could even argue that we could see this as early signs of a major accumulation in the market. Obviously, we don't know that until we start breaking lower and showing more signs of bullishness. But we could definitely argue that these are some very early signs, you know, trade down into that selling climax, automatic rally, secondary test, sign of strength, down into the spring or a bear trap, We come back to test that spring, and as of right now, we then want to see price continue taking higher, breaking, coming down to a last point of support before continuing higher to come and penetrate that high in the market to continue bullish, which is what our longer term bias is, because we're expecting price to continue trading bullish for years to come until we come back up into this supply zone there. So a nice rundown there on both the two major markets I like to trade, just because they seem to be two of the most volatile liquid markets to trade on a daily basis, hence why I picked them really. Nonetheless, it's good to be back on the proper setup, good to be providing you with some proper thorough analysis. Any questions about the analysis, as always, leave them in the comments or message me directly, and I will now pass you over to Luke.
How are we getting on, people? I hope you're all okay. I hope you've enjoyed James's analysis. What I'm going to do now is go through some of the pairs that I am looking at trading this current week, go through my analysis, give you some zones and areas to look out for, and then obviously you can go and apply that to your own charts and do with the information as you please. So what I'm going to go through today is the usual, so XAU USD, AUD USD, EUR USD, and Great British Pound to the US dollar. And I may touch on the Great British Pound to the Japanese yen as well, just to conclude the video. So we'll go over Great British Pound to the US dollar first, as that's what we have on the screen. You'll see here that I have a potential sell zone highlighted out for you all. So I want you to pause this video and highlight this sell zone for yourself. We have just seen price actually penetrate this zone and give us some good signs of rejection. So what we've been delivered with here on the 5-minute time frame is pretty much a double top. We have equal highs creating a neckline. So this is a double top pattern. Now, to close this pattern off, what we would want to see is for price to continue trading us lower, breaking this neckline, and then delivering us with bearish structure. That would be a clear double top pattern. It's like an M shape. And this particular pattern is actually a very common pattern that happens at the end of a bullish market and the start of a bearish market. Okay, so that's what we've been delivered with here so far. So to add to our bias and to our confluence, not only have we had price penetrate this potential sell zone, which is clearly holding a lot of supply, but we've seen good rejection, and we've also seen the deliverance of a candlestick pattern as well. So that's 3 pieces of confluence right there to add to our overall bias. Now, what am I looking for in order to actually execute a position? Well, as I said, I want to break in this neckline that I've got highlighted out here, and then for price to pull back. Why do I want price to pull back? Because by price pulling back, we are able to get a refined entry and then trade price lower. We would have our stop loss set just above our entry point, as our entry point is going to be at the peak. So this would be considered a structural high once the next low is broken, and then we can trade price lower. Now my take profit could be set at these lows here. Why could they be set here? Because if price was to go bearish, then realistically price should trade us lower than these lows. So by putting our take profit there, we are guaranteeing that our take profit is going to be achieved. So if I just clean the chart up a little bit, and I'll show you exactly what I want price to do moving forward and what a potential position would look like for you. So we've had the deliverance of a penetration, we've had good signs of rejection, a double top pattern is underway and it is being formed. We just want to see a break of structure here, or a break in this neckline, and we want to see price break that, pull back into a fractal supply zone from this initial impulsive wave that broke the structure, and then we would look to get involved in riding price all the way down. So price might tap back into a supply zone. So this is obviously just an example. So price would tap into a fractal supply zone, say highlighted here. We would get in somewhere around here. We'd have our stop loss just above the structural high that was created from the penetration, and then our take profit, as I said to you, would be set at these swing lows here, just above the swing lows, just to guarantee that our take profit is achieved. Now, as you can see here, we've got a risk to reward ratio of a 1 to 10. That in itself is generating us with at least 10% returns. If you're risking 1%, if you're risking 2%, you're looking at 20% returns from this position here. So this is just an example. Obviously, don't look at these specific increments as places to enter. This is just an example of how I want to see price play out, and the structure I'm predicting price will put in this coming week. So that's a great response to the US dollar. Definitely be looking to sell into this market, as I do feel price is ready to go bearish and put in that next bearish wave. So moving over to Euro USD, very similar situation. We want to see price penetrate and tap into this supply zone here. What I'll do is I'll just mark out the increments now for you all. There we go. So mark this zone out for yourself. Pause this video, mark this zone out for yourself. It's from this initial impulsive wave that broke the structure. What we see now is price put in that correction, tapping into this supply zone. Once we have a full sweep and penetration of the zone, we can expect the same outcome. So we want to be delivered with a fractal break of structure to the downside, a pullback to take place, and then we can look to get involved in that pullback. So again, Euro USD, I am looking to be sellers in this market, as I do feel like price is going to deliver us with that bearish structure. Moving over to the AUD to the USD, again, we are seeing price put in this corrective wave. I had these three supply zones highlighted out as potential areas that price could tap into before delivering us with the next bearish run. Price tapped into this. Obviously, there wasn't enough supply sitting there in order to completely flip this correction. We did see some temporary bearishness being put into the market, but we've since seen another bullish impulse take us higher. So we will mark this out as our next target. We want to be delivered with a penetration, a break of structure, the usual things that I look for in order to enter in on these markets. If we aren't delivered with that and we see price trade higher than this specific zone, then this would be our final target, where I do feel if these are unsuccessful, then this will definitely be holding enough supply to flip that supply and demand balance. So again, pause the video, mark out these two zones for yourself, because these are definitely places to be looking to sell from. And then also mark out this zone as well, because this is going to be a very good place to put your take profit target. Why? Because I want to see price put in that bearish leg, trading us into this higher time frame demand zone, and then actually trade us higher into this market. So we can look to sell, to buy, and then when price taps into this higher time frame supply zone, we could then maybe look to sell again. So we have the next three steps, which is brilliant. I think it's very important to understand what the markets are telling you, and we understand the path that the price needs to put in and the structure that it should realistically follow. So what I'll do is I'll just leave this on screen for a second for you all to pause the video now, mark out these zones for yourself, and then let's see how price plays out this week. Okay, so just finishing now on the gold market. As we can see here, I have highlighted a last buy to sell region. We have some inefficient structure just sat below this. We've seen price trade us higher, putting in that correction, trading us into this zone. We have actually had a slight penetration of this zone, but I do want to see price dig deeper into this before delivering us with that bearishness. If we go down to the 1 hour and the 30 minute, you'll see that, this wick does actually wick in, but only just. So I want to see price grab a bit more supply and completely flip the current direction of the market. So when we obviously look to sell into the market, this is obviously the last protected swing low. So we'd want to put our take profit just above this, as we can guarantee that our take profit should be achieved from from selling positions, because realistically, if price was to continue bearish, price should break lower than this protected low to create a new lower low. Okay, so that's why we obviously put them above the previous structural lows. Stop loss obviously just above the peak that's created, so we would obviously go down on time frames looking at the 1 hour, 30 minute, 15 minute for a refined entry. Hopefully we can get one that's maybe 20-30 pips large, and then we can trade price lower, and again we walk away with a brilliant risk reward return of at least a 1 to 13. So I wanted to see price dig deeper into supply zone, and then obviously be delivered with what we usually look for when we look to actually sell into these markets or buy into these markets. We obviously want that penetration of the zone. We then want the BOS to the downside, and then that pullback, and then that's when we look to get involved. So for the majority of these markets, we have been waiting for these corrections to finish. So last week was quite quiet in terms of trading opportunities. I didn't trade very much last week. I did plenty of analysis and obviously updated my clients with plenty of analysis of scalp like positions that we could take, but there wasn't any longer term trades that were really showing themselves to us, just because price was putting in these corrections. But now price has penetrated these zones and put in these corrections, we can now really look to jump on board of the next impulsive waves that are going to take us lower into these markets. So yeah, The US dollar is going to be strong next week, I believe, hence why we can look to sell into these markets with the US dollar being a quote currency. But yeah, that is going to summarize my Sunday sessions analysis. I hope you guys have enjoyed. Please remember to mark out these zones for yourself and use those as guides when you're looking to place positions. And also look at the fundamental report that has been sent out as well in the Learning Lounge group chat, because that is going to give you a full report of all the fundamentals that are going to take place this current week that could impact any positions you place on these major currencies. Now, as I say, I hope you guys have enjoyed this video. If you have any questions, any queries, if you're unsure about any of the analysis that I've gone through or James has gone through, leave them in the comments below. And if you aren't involved in the Learning Lounge group chat, get yourself involved. It's completely free. Thank you guys for watching, and we'll catch you guys in the next Sunday sessions.